Okay, let's unpack this. We are diving deep today into a company that presents a truly fascinating tension. Imagine a business with a successful, first-in-class drug, showing strong sales and even profitability. Sounds like a winner, right?
Absolutely. Seems like a slam dunk on the surface.
But when you look closer, you see significant shareholder unrest, major patent challenges looming, and a stock trading, well, way below its past highs.
Yeah. So what is the real story behind Aurinia Pharmaceuticals? That's what we're digging into.
And this deep dive is tailored specifically for you, based on the source materials you've generously shared with us.
Our mission, to try and cut through all the noise in these sources, we're going to extract the most important nuggets of knowledge. The key insights.
Exactly, to give you a clear picture of Aurinia as of early June 2025.
And a quick note, if you're finding these deep dives valuable for getting informed fast, give us a like and subscribe to the Stock Analytics AI YouTube channel.
Yeah, please do.
For our Euro 4.99 a month members, remember you can submit a ticker and get a prioritized deep dive, whether it's a full analysis like this one or, say, an earnings breakdown.
Absolutely. And definitely stick with us until the end. We're going to tease out the key factors that will truly determine if this promising biotech can overcome its challenges and unlock further value.
Yeah, you won't want to miss our final provocative thought on this one.
Before we jump in, just a quick reminder to subscribe to the show so you don't miss any future deep dives.
Okay, let's do it.
All right, let's start by understanding the business itself. What exactly does Aurinia Pharmaceuticals do? And critically, how are they making their money?
Okay, so at its heart, Aurinia is a biopharmaceutical company. They're focused on autoimmune diseases. Right now, their entire focus, pretty much, and their primary revenue stream, it's all centered around lupus nephritis. LN, for short.
Which is a really serious kidney complication of lupus, right?
Exactly. And their flagship product, LUPKYS, that's LUPKYNIS. It's an oral therapy for active adult lupus nephritis. Sales of LUPKYNIS are, well, they're the engine of the company right now.
And the sources show those sales are growing pretty impressively.
They really are. I mean, in the first quarter of 2025, LUPKYNIS hit $60 million.
Wow, $60 million.
Yeah. And that's the overwhelming majority of their total revenue for the quarter, which was $62.5 million.
Okay.
They also get a smaller amount, like $2.5 million in Q1 from licensing and collaboration fees. That's mainly from their partnership with Otsuka.
Otsuka handles LUPKYNS outside the U.S.
That's right. Europe, Japan, places like that.
So the key takeaway is clear then. Aurinia's business is LUPKYNS, especially those U.S. sales where they market it themselves.
Precisely. It's their core and, their current value driver. Heavy reliance.
What about their future? Do they have, like, a pipeline beyond LUPKYNS, anything coming down the pike?
They do, but it's pretty early stage. LUPKYNIS itself got approved in the U.S. in 2021, Europe 2022, Japan just in 2024. It's what's called an oral calcineurin inhibitor. Basically, it helps calm down the immune system cells that attack the kidneys in LN.
Okay, and the pipeline.
Their most prominent candidate is AUR200. It targets different immune proteins, BAF and APRIL. It just started a phase 1 study late last year.
It's phase 1. So really early days.
Yeah, very early. They expect initial data in the first half of this year, 2025. There's also mention of an AUR300, but the sources didn't really have much detail on that one.
So right now, the company's success, its value, it's almost entirely tied to LUPKYNS sales growth and, importantly, its longevity in the market.
Exactly. And any future potential is really linked to whether this AUR200 pans out.
It's a classic biotech story then. Get one product approved, make money from it, then try to build out the pipeline from there.
That's the playbook. But yeah, right now the heavy lifting is all on LUPKYNIS.
Okay, let's zoom out a bit. Think bigger picture. What does the industry landscape look like for these LN therapies? Is it a big market?
It's definitely a significant market, around $1.9 billion globally in 2024. And it's projected to grow to maybe $2.8 billion by 2029. So solid growth.
What's driving that growth?
Things like, increased research, rising rates of autoimmune diseases generally, better awareness, new therapies coming along. The U.S. is a key market here.
But you said the competition is intense.
Oh, yeah. It's intense. GSK's Benlysta is a major competitor. It was actually approved for LN before LUPKYN, and it has a longer track record in treating lupus more broadly, so it's got established presence.
Benlysta, right. Anyone else?
Beyond that, you've got the big guys Roche, Novartis, AstraZeneca, all working on stuff in their pipelines, plus, smaller biotechs exploring totally new approaches, different mechanisms of action.
So LUPKYN has that first oral advantage. but it's definitely fighting for its place.
Absolutely. The oral route and its specific clinical data are its differentiators, but it's a crowded field.
And are there hurdles even for patients getting the drug? You mentioned cost.
Yeah, the sources point to that payer hesitancy because it's, an expensive specialty drug, and prior authorization requirements.
Ah, the paperwork headaches.
Exactly. Those can create administrative hurdles and delays. It can slow down how quickly patients actually start the therapy, even if their doctor prescribes it.
Okay, so to sum up the business part, Aurinia, deeply focused on LN, successful first product, LUPKYNIS, driving sales, and now profit. Growing market, but super competitive, with access hurdles. What makes their business hard to replicate?
Good question. I mean, a few things make it tough. First, obviously, the patent protection around voclosporin, the drug itself. That's key, although we'll get to the challenges there.
Right.
Second, just successfully navigating the whole clinical trial and regulatory maze. It's incredibly complex, takes years, costs a fortune. Getting any drug approved is hard.
Sure.
Third, having that first mover advantage as the oral option. In a market where maybe other options were infusions, that convenience matters. And fourth, building up the specialized expertise and the sales force needed to effectively reach nephrologists and rheumatologists. It's a specialized market.
But it's not like they own the concept of treating LN forever. Other companies can still come in with different drugs.
Absolutely not. Replicating LUPKYNIS specifically is hard because of patents and the regulatory path they took. But developing new therapies for LN, lots of companies are trying that. The market itself isn't exclusive.
Okay, let's pivot then. Let's talk about the people running the show. Chapter 2, Management Evaluation. Who's at the helm, and what's the story there, especially concerning shareholders?
Right. The CEO is Peter Greenleaf. He's got an extensive background in pharma, led other companies like Cerecor, Sucampo, which actually got acquired while he was there, MedImmune before that.
So experienced.
Yeah, definitely has industry experience. And several of the current key executives, like the COO, Max Donley, the CMO, Dr. Greg Keenan, they apparently worked with him back at Sucampo, so there's a team history there.
But the sources highlighted quite a bit of controversy around him.
Yes, this is a major point of contention in the materials. There's been significant shareholder dissatisfaction, activism, really, targeting CEO Greenleaf directly.
What were the main complaints?
The accusations range pretty widely. Things like anti-investor behavior, value destruction, concerns that the stock has underperformed significantly despite his compensation, particularly RSU awards. And a big one, a perceived failure to secure a value-maximizing sale of the company when opportunities might have existed. Lack of transparency also comes up.
I remember reading about a shareholder vote that was pretty dramatic.
That was a key event, yeah. In 2024, shareholders actually withheld majority support for his re-election to the board. That's a very strong signal of discontent.
But he stayed on.
He did. The board at that time decided to retain him. They cited exceptional circumstances, but according to the sources, they never really clearly explained what those were publicly.
Wow. That must have poured fuel on the fire.
It really seemed to amplify the activist pressure. Calls for his resignation continued or even intensified after that.
So a real governance flashpoint. What's happened since then? Any changes?
Big changes, actually. A new board chair, Kevin Tang, was appointed. He himself is a prominent activist investor through Tang Capital Management.
Ah, so an activist took the chair. Interesting.
Yeah. And under his leadership, the company's seen some significant shifts. The board size was reduced, new independent directors came on, and crucially, they implemented strategic moves that directly addressed many of the activist demands.
Like the cost-cutting measures.
Exactly. They shut down non-core R&D programs, which they said would save over $50 million annually. And there were major workforce reductions. A 45% cut late last year, apparently following an earlier 25% cut, aiming for another $40 million plus in annual operating savings.
That's substantial.
Plus, they launched a $150 million share repurchase program, and they modified the executive RSU structure, things shareholders had been pushing for.
So, okay. An experienced team, technically. But the CEO has faced major, very public shareholder opposition, which seems to have ultimately forced significant governance and strategic changes, largely driven by activists now influencing the board.
Yeah.
How did they handle this crisis overall?
Well, the initial response, like keeping the CEO despite the vote, was seen by critics as defensive, maybe even tone-deaf. But the more recent actions, the deep cost cuts, the buyback, the board refresh under the new chair, that shows a definite shift. much more responsive to the activist pressure. It suggests the external pressure really forced a major strategic pivot.
What about transparency? Was that part of the critique too?
Yes, transparency or the perceived lack of it was another recurring theme. Beyond not explaining the CEO retention fully, sources mention criticism over how long it took them to disclose some patent infringement lawsuits filed against generic companies back in April 2025.
They sued generics but didn't announce it right away.
Apparently not immediately, and activists called for full transparency around that litigation. So yeah, that fueled the narrative about transparency issues.
So even if they're doing the standard quarterly reports and filings, these specific instances seem to have damaged trust with some investors.
That's definitely the impression you get from the sources. And while a proxy advisor like Glass Lewis recommended voting for the company's proposals at the 2025 AGM, suggesting they see the recent governance improvements positively, those specific past actions clearly created a trust deficit for some vocal shareholders.
All right, this leads to the really tricky question.
Yeah.
Based only on these sources, are they honest, capable, and shareholder-oriented?
Yeah, that's complex based on this info. Capable, you'd have to say yes, operationally. They successfully developed AUPH, got it approved, and are now growing sales significantly. That shows capability in the core business.
Okay.
Honest and transparent. That's where it gets challenged by the critiques. The lack of explanation around the CEO vote, the timing of the litigation disclosure, these specific instances cited in the sources raise questions for some about their openness. And shareholder-oriented. Highly contentious. Past decisions were heavily criticized by activists as not being in the best interest of shareholders or not maximizing value. However, the recent actions, the buyback, the cost cuts, the board changes, driven by an activist chair, those align very directly with shareholder demands. So you could argue their orientation is improving significantly under pressure, but the unresolved CEO situation means it's still a point of debate.
So, capable, yes. But with a challenged history on transparency and shareholder focus, now may be trending better due to that activist influence, but still some lingering questions, especially around the CEO.
That seems like a fair summary of what the sources suggest.
Let's transition to the hard numbers then. Chapter 3, Financial Health. How does Aurinia look financially as of early June 2025? Where do things stand?
This is where the story gets, well, significantly brighter recently. You really see the impact of AUPH now hitting its stride and those cost cuts kicking in.
Okay, give us the highlights.
As of early June, the share price was around $8.19. Market cap about $1.1 billion, maybe a bit more. The trailing PE ratio looks high, like around 29, but analysts are projecting a much lower forward PE, maybe in the 10 to 16 range.
Suggesting they expect earnings to grow quite a bit.
Exactly. It points to strong expected earnings growth relative to the current price.
And the revenue growth we touched on earlier.
Still strong and consistent. Q1 2025 total revenue was $62.5 million. That's up 24% from Q1 last year. And that built on a solid 34% growth for the full year 2024. Their guidance for this full year 2025 is $250 to $260 million. So the adoption curve for AUPH looks good.
But the really big news in the financials, based on the sources, is the swing to profitability, right?
Absolutely. This is the crucial milestone they've hit. In Q1 2025, they reported strong positive operating margins nearly 35% and net profit margins of over 37%.
Wow, that's a huge shift.
It's dramatic. A massive turnaround from the significant losses they were posting in previous years and even from the small operating loss they had for the full year 2024.
So hitting solid profitability in Q1 2025 is really a transformational moment for the company's financials.
It really is. It signals they finally reached a scale where AUPH sales are more than covering their now reduced cost base. Sustaining this level of profitability is obviously the next key challenge.
How's the balance sheet look? Any debt?
That's another major positive. Exceptionally strong balance sheet. They've been debt-free for over 5 years. Zero debt to equity.
Zero debt. That's impressive for a biotech.
It really is. And they had a healthy cash position, over $312 million in cash and investments as of March 31st, 2025. That gives them tremendous financial flexibility and reduces risk significantly.
Are they actually generating cash from operations now too? Free cash flow.
Yes, that's another huge positive step they've taken recently. They've transitioned to positive free cash flow generation. The sources mentioned about $47.5 million annualized FCF. Their Q1 operating cash flow was positive, around $1.3 million, or actually $12.4 million if you exclude the restructuring costs. That's a huge improvement from negative cash flow in Q1 last year.
And that positive cash flow is vital, right?
Absolutely crucial. It funds their ongoing operations, the pipeline development like AUR200, and importantly, it funds that $150 million share buyback program they announced.
So bottom line on financial health. Is the company profitable with a strong balance sheet?
Based on the latest data points, especially Q1 2025, yes. They achieved strong profitability in that quarter. And the balance sheet is rock solid. Zero debt, significant cash pile. Simply Walst even gave them their top financial health rating, 6 out of 6.
Have earnings been consistent historically, though? Or is this profitability very new?
Oh, definitely not consistent historically. Like a lot of biotechs launching their first major product, they burn through cash for years, posting significant net losses while investing heavily in R&D and commercial launch.
Right, that's typical.
Yeah. The trend you see is those losses narrowing progressively from 2021 through 2023. Then they hit a small annual profit for the first time in 2024. And then, bam, the big jump to much stronger profit in Q1 2025. So the consistency is really in the positive trajectory over the last couple of years.
And dividends? I assume none.
Correct. They don't pay dividends, no history of it. That's totally standard for a company in this growth phase. They're reinvesting capital back into the business or returning it via those share buybacks instead.
So, final check on financials. Are earnings volatile? And do they have excessive debt?
Earnings have been historically volatile, swinging from big losses to now profit, but the current trajectory is strongly positive and absolutely no excessive debt. Zero debt is about as conservative as you can get.
Okay, great. Let's move into the second half of our deep dive then. We understand the business, the management situation, the financials. Now, how is the market actually reacting to all of this? Chapter 4, market sentiment.
Yeah, the market perception of Aurinia, based on the sources, it's really a reflection of everything we've just discussed. It's quite conflicted, kind of multifaceted.
Okay, what are the positives the market seems to be keying into?
Well, definitely the strong LUPKY-NI sales growth, hitting that profitability milestone, the positive FCF generation, and that super clean debt-free balance sheet. Those are all major ticks in the positive column. And some of the valuation metrics, like that lower forward PE we mentioned, could suggest to some investors that the stock might be potentially undervalued, assuming they hit those future earnings expectations.
Makes sense. What about the negatives holding the stock back?
The big overhangs are clearly the persistent CEO leadership controversy and the related governance issues. That creates uncertainty. Then there's the single product dependence risk. What happens if something goes wrong with LUPKY&I?
Right.
The competitive intensity in the LN market is only increasing. That's a constant pressure. And maybe most importantly right now, those patent challenges. They introduce a huge amount of uncertainty about how long LUPKY&Is will have market exclusivity.
And the fact the stock price is still well below its past highs, despite the good financial news.
Exactly. That tells you the market is weighing these risks very heavily. It's discounting the positive operational news because of these significant governance, competitive, and particularly the legal patent risks.
So the market is basically balancing the good financial momentum against these pretty significant, potentially company-altering risks. Creates a real push-pull dynamic.
That's a perfect way to put it. A definite push-pull, which likely contributes to the stock's volatility.
What are the Wall Street analysts saying? Are they more optimistic?
Generally, yeah. Analysts seem cautiously optimistic, leaning positive. Most of the ratings mentioned in the sources were buy or equivalent.
Do we have any price targets?
Yeah, some examples were cited, like H.C. Wainwright at $15, Cantor $15, RBC $11. Some of those might be slightly older, but a recent composite target in early June 2025 seemed to average around $10 to $10.34.
Okay, so with the stock around $8.19, those targets suggest decent potential upside, maybe 25% or more.
Right. Analyst optimism likely focuses on those strong fundamentals, the sales growth, the profitability, and maybe some optimism baked in for the pipeline's potential down the road.
But again, the actual stock price is lagging those targets.
Correct. Which implies the broader market is applying a higher discount rate to Aurinia than the analysts are. They're clearly more worried about those unresolved risks, the governance stuff, the patent outcome, or perhaps they're just waiting on the sidelines for key catalysts, like seeing the actual AUR200 data or getting clarity on the patent lawsuits.
How has recent news been impacting sentiment? Kind of a mixed bag.
Yeah, definitely a mixed bag lately. On the plus side, you had those strong Q1 financials. They reaffirmed their full-year guidance. The market's anticipating that AUR200 Phase 1 data soon. The share buyback being active is generally seen as positive, too.
Okay.
But on the negative or concerning side, you still have the ongoing shareholder activism noise. The calls for the CEO to resign haven't gone away. And the big one was the revelation of those patent infringement lawsuits filed against generics back in April.
Right, the litigation itself is a negative uncertainty.
Exactly. And then the criticism about the timing of the disclosure just added another layer of concern about transparency for some. Plus, while the restructuring saved money, big layoffs can also create unease about stability and morale.
So strong operational performance news running headlong to persistent governance concerns and significant new legal risks creates a fog of uncertainty for investors.
Precisely. Makes it hard to get a clear read.
What about short interest? Are people betting against the stock?
Short interest is definitely notable. The sources mentioned around mid-May 2025, over 10 million shares were shorted. That was over 8% of the free float.
That's a fair amount.
Yeah, and the days to cover how long it would take shorts to buy back all those shares based on average volume was relatively high, like 8 to 12 days. This definitely indicates a segment of the market is betting on the price going down.
Why would they be shorting?
Likely due to all the risks we've been talking about. Concerns about whether LUPKYNS growth is sustainable, the huge uncertainty around the patent litigation outcome, maybe skepticism about the pipeline's value, or the potential impact of the governance issues.
Could that high short interest set up a potential short squeeze?
It could. A high days to cover means if there is significant unexpected positive news, say a win in the patent case, or really strong AUR 200 data short sellers might scramble to buy shares to close their positions, and that sudden demand could push the price up sharply.
What about options activity?
Options data mentioned was a bit mixed. A low put-call ratio suggested maybe more call options outstanding than puts, which could be bullish positioning or just hedging. Implied volatility was relatively high, around 39%, meaning the options market is definitely anticipating significant price swings ahead.
So, summary on sentiment. Short sellers are clearly cautious or bearish, but the options market seems braced for movement, possibly around upcoming catalysts.
That's a good read. The market's definitely anticipating something happening, one way or the other.
Okay, let's shift gears slightly and look at who actually owns the company. Chapter 5. Ownership structure. Who holds the shares?
Institutional ownership is pretty significant here. Around 356 institutions held over 54% of the shares, according to the data. And interestingly, in Q1 2025, there was actually a net increase in the total shares held by institutions, more buyers than sellers among the big players.
Are there any major holders that stand out? Who are the big fish?
Yes, definitely. Importantly, activist firms are major holders. Tang Capital Management, run by the now board chair Kevin Tang, holds over 7%. Armistice Capital is another activist with a significant stake, around 3.7%.
So activists have serious skin in the game and board representation.
Absolutely. And then you also have the usual large asset managers like BlackRock, State Street, Vanguard, Morgan Stanley holding meaningful positions too.
So that concentration, especially with activists, must give them considerable sway.
It really does. That concentration allows these key stakeholders to exert significant influence over the company's strategy, its governance, major corporate decisions like M&A or capital allocation. It means they can drive change pretty decisively, as we've seen.
What about insiders? Management and directors, how much do they own?
Insiders collectively held around 11% of the shares. The sources noted some recent insider sales. CEO Peter Greenleaf sold a decent chunk of shares in March 2025, as did the CMO around the same time.
Insider sales, sometimes viewed negatively.
Can be, yeah. Though people sell for many reasons, like diversification or tax planning. On the other hand, directors also received routine share awards, likely RSUs, in May 2025. Those are designed to align their interests with shareholders.
Okay, so some insider selling might raise an eyebrow, but the really dominant feature of the ownership structure seems to be that concentration among institutions, particularly those activist funds who are now actively shaping the company's direction from the board level.
That's definitely the key takeaway from the ownership picture.
Right.
Their influence is central to the ongoing governance changes and strategic shifts.
Okay, let's pull all these threads together now.
Yeah.
Chapter 6, risk assessment. Let's do a quick SWOT analysis based on everything in the sources. What are Aurinia's core strengths?
Number one strength is clearly LUPKYS itself. first oral LN therapy addresses a real unmet need, strong clinical data. Strength number two is the recent financial performance, that strong sales growth, hitting profitability, positive FCF.
Yep.
Three, the debt-free balance sheet and healthy cash position. Four, their patent portfolio, which protects LUPKYNS even though it's currently being challenged. Five, the strategic partnership with Otsuka for ex-US markets is valuable. And six, arguably an experienced management team, despite the controversies around the CEO.
Okay. What about the internal weaknesses or limitations?
The biggest weakness, hands down, is the heavy dependence on that single product, LUPKYNS. Huge concentration risk. Second, the ongoing CEO leadership controversy and the lingering effects of the shareholder activism definitely create instability and distract focus.
Right.
Third, the pipeline beyond LUPKYNS is pretty limited and very early stage with AUR200. Fourth, the risks associated with those major restructurings, potential loss of key knowledge, impact on employee morale. Fifth, they just lack the significant economies of scale that their large pharma competitors have. And sixth, that perceived lack of transparency on certain critical issues we discussed earlier.
Makes sense. Opportunities for growth or upside.
Well, the biggest opportunity is just continued market penetration for LUPKYNS. Keep growing sales in that expanding LN market.
Right.
Second, successful development and eventually commercialization of AUR200 would be huge for diversification.
Yeah.
Third, maybe potential label expansion for LUPKYNS into other related conditions if the science supports it. Fourth, potentially expanding into new geographies beyond the Otsuka deal territories. Fifth is the whole strategic angle. Maybe they acquire smaller assets to build the pipeline, or maybe they become an acquisition target, which some shareholders clearly want. And sixth, just resolving the governance issues could improve investor sentiment and potentially unlock value in the stock price.
Okay, now the scary part. External threats. What are the big ones?
Intense competition is number one. Existing drugs like Benlysta, plus a whole pipeline of potential new therapies coming from big and small companies. Number two, and maybe the most critical near-term threat, those patent challenges. The risk of losing exclusivity on LUPKYNS much earlier than expected due to generic entry would be devastating to their revenue stream.
That's the existential one.
Pretty much. Third, ongoing pricing pressure from payers, insurance companies, always a factor for expensive drugs.
You also mentioned a specific tariff risk earlier.
Yeah, that was an interesting point flagged in the sources. Potential U.S.-imposed tariffs on goods imported from Canada.
How could that hit Aurinia? They're Canadian, right?
Exactly. They're domiciled in Canada, but their primary revenue source is the U.S. market from LUPKYNS sales. If LUPKYNS itself, or key components, are manufactured or sourced significantly in Canada and then imported into the U.S.
Those tariffs could hit their cost of goods sold.
Right. The sources mention potential tariffs like 25% on medical devices materials, or maybe 10% more generally. For a company relying on U.S. sales, that could directly squeeze their profit margins or force them to try and raise prices, which is tough in a competitive market.
And the sources noted a broader dependence on Canadian pharma manufacturing for the U.S.
Yeah, apparently billions of dollars worth of U.S. pharma relies on Canadian manufacturing, and tariffs could add substantial costs industry-wide, maybe $750 million, according to one estimate. And for some specific drugs, there might not even be alternative non-Canadian suppliers readily available, so it could potentially disrupt supply chains too.
So Aurinia needs to understand its specific supply chain vulnerability there.
Absolutely. It's a less obvious geopolitical risk layer they need to assess and potentially mitigate if those tariffs become a reality. Definitely something for investors to keep an eye on too, given their specific situation.
That's a really important nuance. Any other major threats?
Just the standard stuff, really. Regulatory risks, changes in requirements, maybe safety issues, crumping up post-marketing, clinical trial outcomes for the pipeline, and also the challenge of retaining key talent and expertise, especially after going through multiple rounds of significant layoffs. You need the right people to execute.
Okay. This brings us to our conclusion and the hook reveal. Chapter 7. Let's synthesize this. What's the overall picture of Aurinia right now?
I think the picture is one of a company really undergoing a major transformation, but facing significant crossroads. On one hand, driven by the success of LUPKYNS, they've achieved impressive milestones, strong sales growth, that recent jump to solid profitability, positive cash flow generation, and it's all supported by that very robust, debt-free balance sheet. Operationally and financially, they're looking much, much stronger than just a year or two ago.
But there's a big but. They're simultaneously battling some serious headwinds.
Exactly. That much improved financial picture is significantly burdened by major risks. The heavy single product concentration, the potentially existential threat from the ongoing patent litigation, the intense and growing market competition, and that internal friction related to the governance situation and the lingering leadership uncertainties.
So while they've made strategic shifts, seemingly forced by activist pressure, those core issues and uncertainties remain front and center.
That's right. The path forward isn't clear-cut.
So if you look at it from a value investing perspective, it's a really mixed bag, isn't it?
Definitely. Quantitatively, you look at the recent profitability, the growth trajectory, the clean balance sheet, those analyst price targets. You could argue it looks appealing, maybe even undervalued on some metrics.
The qualitative side.
But the qualitative risks are substantial and quite scary. The outcome of the patent fight is binary and critical. The governance overhang isn't fully resolved. The single product risk is undeniable. It makes it a much more complex and, frankly, riskier investment case than the simple numbers might suggest. It's definitely not a straightforward buy based just on the recent financials.
Okay, so here's our final provocative thought for you, the listener, to consider, building on everything we've just unpacked. Unlocking long-term shareholder value for Aurinia seems to hinge not just on continuing to sell more LUPK-NAS, but crucially on successfully navigating these critical upcoming developments and uncertainties. What will truly determine their trajectory from this point forward?
Yeah, what are the absolute key things to watch? We think it boils down to these. First, can they actually sustain that LUPKYNS growth momentum against the increasing competition? That's table stakes.
Right.
Second, and maybe most importantly, what is the definitive outcome of that patent litigation? Winning or losing those cases drastically changes their exclusivity runway and long-term value proposition.
Huge.
Third, does the AUR200 pipeline show real promise in the upcoming data? They desperately need diversification. Fourth, can they fully resolve the governance issues and leadership questions in a way that rebuilds broader investor trust and provides stability?
And fifth.
And fifth, how effectively can they assess and navigate those external threats we talked about, particularly something unique like those potential U.S. tariffs impacting their cost structure?
The company has definitely shown it can make significant strategic changes when under pressure. We've seen that. But the real test now is successful execution against these specific pivotal factors we've just highlighted.
Exactly. Watching how they manage these specific challenges and opportunities will really tell the true story of Aurinia's future potential.
And that concludes our deep dive into Aurinia Pharmaceuticals based on the sources you provided. We really hope this gives you a much clearer, more nuanced, and insightful picture of the company right now.
We hope it helps you cut through the noise.
Remember to subscribe to the Stock Analytics AI YouTube channel for more in-depth analysis like this one.
And finally, please note the following important disclaimers. This report is for informational purposes only and does not constitute financial advice, investment advice, trading advice, or any other sort of advice, and you should not treat any of the report's content as such. The information provided is based on research material available as of early June 2025 and may not be comprehensive or current. All investment decisions should be made with the help of a professional financial advisor and after conducting your own thorough research and due diligence.
Also, please be aware, this report may contain content generated by artificial intelligence. While efforts have been made to ensure accuracy based on the provided research materials, the information should be independently verified. Do your own research before making any investment decisions.